on another open house session on UCC file structure of upload in UCC information in the exchange. I am Jasmine Pasha from NSE. This is Siddeshwar from NSE UCC team, and this is Aniket Bhanu from NCL. We will start off with all the changes that have been taken place in UCC file structure. Uh, there is a change. This file structure, the revised file structure, is available in the circular number 59004, dated October 18, 2020. So this file structure is effective from Jan 22, 2024. So all the members will have to take a note of this. This is applicable for all the members, just not the members who are opting for UPI. So members must be ready by 19th Jan 2024. Post that, there will be no extension on the deadline. The members will have to be ready with their system. So in regard to file harmonization, there have been few changes in the UCC file structure. There have been changes in DMAT account. Earlier, 3 details were included in the UCC database. Now it has been increased to 5. So the additional fields are 4 and 5. So as per existing file structure, 1, 2, 3 DP details used to go to the depositories for mapping, and the process remains the same. If you are opting for UPI, the primary indicator of the DMAT details must be within the first 3, and the same will be going to the depositories for mapping. So next is the file structure, which has been revised, is released in UAT, and the UAT details are uploaded in the file in the circular 59712 on December 11, 2023. So coming to this file structure, which has been revised, there is an introduction of field type called account type. So all the members must take a note of this. There are 3 values: own, error, and client. Own is where you will the members' own UCC will have to be updated as own, and error for all the error accounts of the members, and for all the rest of the clients of the member, they will have to opt for client option. Coming to opt for UPI, there are 4 values: Y, N, NA, and D. So if a client is either individual or HUF, they can opt for Y. And if they don't want to opt for this UPI facility, then they may opt for N. And there is an option for NA. So all the categories which are not eligible for UPI will have to select the value as NA. And then there is another value called D, that is called deregister. So if you have opted as Y and now you want to deregister, so you will have to send the record as D. Now there is another addition to the field called IFSC code. The bank details that you have updated, there is an IFSC code must also be updated in the UCC database. Again, there is another additional field, that is primary and secondary indicator for all banks and DP details. So for this, what you will have to do is the set of bank details or depository details that you have provided, you will have to mark them as either primary or secondary. Now, please note, there can be only one primary. There cannot be more than one primary, and all the rest of the accounts which is apart from primary should be marked as secondary. So this is with regard to file format changes that have been taken place in NSE. We have received few questions from the members. There have been a mix of both NCL and NSE questions, and we will be answering them. So there is a question from Bajaj Finance. Issues faced while uploading NSE FO file. It is not getting uploaded despite trying multiple times. So what you will have to do is, while you're uploading NSE FO file, you will have to opt the option as NA, because this UPI facility is only for individual and HUF, only in cash segment. For all the other segments and all the other categories, you will have to opt the field value as NA. So once you opt it as NA, then you will be able to upload the file successfully. So moving on to next question. New bank file would be discontinued, or will it be used to upload bank details under UCC modification? So there is a in the interim, until we go live, there is a file format which we have introduced, that is in circular number 59983. So in this, what you'll have to do is there are additional bank details, like I told earlier, like IFSC. All such details have been captured in this particular file. And this is only for people who are opting for UPI. And now that we will go live since Jan 22nd, then all the fields must be uploaded in the system itself via front module or bulk upload or API, whichever the member wishes to. And the revised file structure will be utilized going further from Jan 22nd. What is the use of primary account in case of non-TSBA client? So we have asked all the clients to update primary account, primary and secondary indicator, because going forward there are few projects coming in. So this is for the further use. And is bank details and DP details are compulsory for modification file?
So basically coming to the modification file, no field is mandatory in the modification file. Only the UCC code and the segment you need to enter while uploading the modification file, and only the details requested by the clients which member needs to update, only that field needs to be mentioned in the modification file. Whereas if the legacy data does not have bank details and the DP details, and if you try to modify any other fields, so this might trigger to update you the bank details and the DP details. So only in that case, you need to update the bank details and DP details in the modification file.
Thank you. Please explain the process on how to upload new UCC file format. So basically what is happening is for clients opting for UPI until 19th of Jan, you will have to give us the data in the file structure, which is in the circular that has been introduced lately. So the details captured there, we will take it and we will validate with the banks, sponsored banks. The request will go to NPCI and then they will validate and then they will give us the record. The same way, DP details will be validated by depositories. If there is success of both DP and banks, we will send the record to CCs. And only such clients will be eligible for UPI facility. Now going further from 22nd Jan 2024, new file structure will be applicable and all the details will have to come to the system itself. And the file format which has been utilized right now will be disseminated. So going to next question. Through UPI, only margin money will be blocked or full trade value will be blocked?
So what will happen is the block that is created can function as collateral as well as settlement value. But that doesn't mean that entire value of trade has to be pre-funded. So suppose there are, let's take two examples, both are possible. Let's say for a customer creates a block of you, if a customer wants to purchase a share, you can ask the customer to create full value of block upfront, including STT, stamp duty, etc. That is also possible. Or alternatively, what you could, since 20% is the minimum margin to be collected, and customer wants to buy shares of 100 rupees, let's say, you could have the customer create a 20 rupees block first, and subsequently for the remaining value of 80 plus STT, stamp duty, other charges, that additional block can be created subsequently up to 8 p.m. 8 p.m. is the cutoff by which all the UPI mandate to the extent of pay-in has to be created. So the block works both as collateral as well as settlement, and doesn't have to be, it is not necessary that you have to create a full value of block upfront. You can create, but at least to the extent of margins that are to be collected, the block should be created before trade is executed.
Thank you. There's another question from Pure Broking. What is the process for account closing in UCC database?
Okay, so to answer this, there are two scenarios where firstly, if you want to close a UCC, you can do it from via member portal through front end. We have given two options. Firstly, you can go through update client status, through which you need to just enter the UCC and populate the segment which you want to close. Secondly, there is a file method, that is a short file, through which you can upload the file and close the UCCs. Whereas the second scenario is, suppose a client has opted for UPI and now he wants to opt out. So directly he cannot opt out, that is from Y to N, he cannot go. He'll have to deregister first. So he has to mention the same to the member, and the member will upload the file containing as D. So accordingly, the client will be deregistered or opted out from the UPI.
There's a question from Prudent Broking. Is it mandatory to obtain UPI from client?
Okay, it is not mandatory completely. It is optional for the clients to opt for the UPI. So similarly, it applies to the members also, that it is an optional facility whether they want to facilitate the client for the UPI facility.
There's a question from Javeri Securities Limited. UPI block indicator no for non-opted clients, and any for non-eligible clients are to be marked at once, or any modification can be marked when it comes. So it is totally on the member. If you want to do it as a one-time activity, you can. And but you must be informed that while you modify any kind of UCC details in the UCC database, there will be a trigger for you to modify these details. So that way you will have to modify, but if you want to do it as a one-time activity, it is totally on the member. There's a next question from Javeri again. Mechanism SOP from CC for UPI block is pending to be received.
This question is not clear. So let me just, we have issued a number of circulars. Let me give you a summary of them. So we issued the operating guidelines on October 12th. On October 12th, we also issued the API specifications for connectivity with the clearing corporation. Then in November 13, we issued the end of day file formats, as well as the guidelines on how to participate in the UAT with and connect to the test environment. And subsequently, we have also issued for a circular on brokerage charges, how they are to be collected. That was on in December 20th. And on December 28th, we have also issued the process of going live. What letter is to be given to us for going live. So all these things are in place. All these circulars are issued. You can search it on our website. With the word blocked. If you just put blocked in the search term, and NSE Clearing Capital Market as the issuing department, all these circulars will come. If there is any other specific question, then you can always reach out to us.
There's another question by Javeri Securities. Details of bank details of CC to map by client in UPI for opting UPI block is not available.
Okay, so I think this question is about the virtual payment accounts of the CC in favor of which the account is to be created. So this information we have not put out in any circular, but we have when a member enrolls, so we have given a format of letter in our December 28th circular as to how you can enroll for a UPI. So when somebody submits this request for enrollment as per that circular, we are giving the account details of the clearing corporation to those members only.
As a market information, NPCI on pilot basis is allowing secondary market UPI block. It is not feasible by all clients. Please provide list of banks in city for allowed UPI.
So more and more banks are coming in. We are in testing with multiple banks right now. Again, as we have issued circulars, we have as a sponsor bank, 2 banks are live, HDFC and Yes Bank. And as customer banks, where customers can hold accounts and create mandates, 2 banks are live, HDFC and ICICI. So these are all like major banks or such as HDFC and ICICI are live. And we are working with more and more banks so that they can also come on board. NPCI is also working with more and more banks and PSP apps also, so that they can come on board. And in the coming weeks and hopefully by the end of this month, you will see a greater number of banks participating. But like I mentioned, like the large banks like HDFC and ICICI are already live.
There's a question from SVA Securities Private Limited. Do we need to update all UCCs active, inactive by 19th Jan with new fields as yes, N or any? So again, it is totally on the member. As I told earlier, if you are doing it as a one-time activity and you want to update the details of all the clients, you may do so. But however, whenever you try to modify UCC details, then the system will trigger and ask you to update the necessary new fields that have been introduced. So that way you have to put in the details. So if you're doing it as a one-time activity, then it's well and good. Can this file be used manually or via API? If you are referring to the IFSC additional bank details file, yes, it is manual. All you'll have to do is fill the details and send us to uci@nsc.co.in, and we will consider the file for either opt or deregister for UPI. There are questions for block amount from Texical vendor. There are questions from Javedi. Kapil Sharma asks, through UPI, only margin money will be blocked or full trade value will be blocked?
I think we've covered that question. To start with I think you are asking the questions from the vendors.
How to find detailed transaction of UPI debit or credit a client bank account?
Okay, so what happens is if you look at our API specifications, members have to host certain APIs. One of them is notify block debit. So what happens is whenever we do a debit on the customer's UPI block or mandate, we send a notification on the notify block debit API. So you can listen on that API and keep track of what has been debited on the customer's against the customer's mandate. If you miss any notification of your service is not up, we also provide an inquire API. You can now call on the inquire API to get any details. And if the question is how do we reconcile with the customer's bank, so the debits that you see from coming from us versus customer's bank account, then again that the customer will have access to because this is the customer's savings bank account or whichever account, the customer will have access to the bank account, and customer can cross check whatever we have given you on the notify block debit API and you would have passed on to the customer against the entries in the customer's bank statement.
Next question. Want API for UPI closing balance or any files?
So for UPI, there are no files. There are for obligations, and there is already some files about they are mentioned in the November circular that I mentioned. For the UPI block balance, we have given an API segment block balance query. So right now only cash market segment is active, so you have to query for cash market. And when you call that API in the response that we give, we will give the latest available balance.
Date-wise EOD closing balance of UPI client required in any files?
So like I mentioned, we have not given it in file, but you can anytime inquire the API and know the latest available balance.
If CC limit allocation not allowed, then how EPI credit of 80% allocated?
Okay, so what you will need to do is, let us say, take this example that the client has sold share A of 1,000 rupees and he wants to buy share B of 800 rupees, which is allowed because you can give 80% ledger entry against the provided that you have done early pay of stock A. And in this case, there is no need to create any mandate. But in case of non-UPI clients, you will have to do allocation to the extent of the margin applicable. Which cannot happen in case of UPI clients because we have stopped the allocation facility. So what you will have to do in this situation is let the customer sell 1,000 rupees share. You will have to do early paying. Against this, you will give ledger entry up to 800. You can allow up to 800 is allowed. Against that, you will allow the customer to purchase another share. And then what happens is there will be a short allocation in this case because you would not have allocated and the customer has not created any block. But we have introduced a new reason code that is the which is given in our October operating guidelines. You will have to report short allocation in this new reason code that for this customer I have done I have given the ledger entry in lieu of EPI. But I just want to warn, like a warning that this particular reason code is only available for UPI clients. For non-UPI clients, if you are giving credit, then you have to allocate. Then you cannot use this reason code because their allocation is the way to go. Here, because allocation is blocked, this new reason code is introduced.
Next question. STT and stamp duty in expense files include or exchange auto debit is the same?
So what we do is STT and stamp duty is calculated by us currently, and so for these UPI clients we are collecting it also without waiting for the data from members. So trade obligation arising out of trading, STT and stamp duty. These three we will collect regardless of, we will not wait for any data from the members. We will debit them and we will collect them always. Only additionally, if you want to have TM charges, which includes brokerage as well as anything else that you might want to collect from the client, such as exchange fees or SEBI turnover fees, etc., that aggregated amount you can give as per that December 20th circular, and we debit it. So trade obligation, STT, stamp duty, by default CC will debit. If you want to give TM charges, you can give TM charges additionally, but don't include STT, stamp duty in TM charges because CC is always debiting it.
What is the logic of same margin reporting of EOD?
So as of now, there is no change in the client margin reporting. You will do client margin reporting as you are doing today, and the UPI blocks that are created that you can know that you can use in reporting as if that amount is collected and put in the ledger.
What is the logic of same margin reporting of peak margin?
So for peak margin also, peak margin as well as EOD margin, both idea is the same, that whatever is block created in favor of the CC, that you can report as available, no, that can be considered towards available collateral in margin reporting.
The next question, if short debit to broker, then when received from client, how to credit it to the broker?
Okay, so I think this question means that if the customer has not created enough block, and because of which there is devolvement of obligation on the broker and which we have collected from the broker, then how will the broker get the money back? So again, let me take an example. Suppose there was an obligation of 100 rupees and the client had zero block. So 100 rupees we took from the broker, and the payout to this client, the shares that were due to the client, we will pledge it in favor of PUSPA. Now there are multiple ways in which so we will maintain this balance. So first of all, we maintain that there is 100 rupees shortage of the client, which has to come from the client and go to the broker. That debit balance we will maintain until you deregister the client or you change the clearing member. So other than that, we are keeping this debit balance. Now, to suppose you sell the shares that are in PUSPA, because when we gave securities payout, that was pledged to your PUSPA. If you sell the shares in PUSPA, out of that value realized, you will sell in the client's name. So whatever is the payout due to the client from PUSPA sale, uh, from that total amount, 100 rupees we know has to go to you. So we'll not give the end. Suppose after your sold share, there's a payout of 150. So out of 150, 100 we will not give to client, 100 we will take and give to the broker, and the remaining 50 payout will give to the client. This can happen on account of sale from PUSPA, or it can also happen on account of any other regular sale by the client. Additionally, suppose the client creates a new block. So because there is a shortfall of client, next day client creates a UPI block of, let's say, some 500 rupees. Then out of that 500 rupees block, we will immediately, moment we accept moment we get the block, we will debit 100 rupees, and this 100 rupees we will give to the broker. We'll only add 400 to the collateral. So after we receive this 500 block, 100 we are going to debit, 400 we will add to collateral, and 100 that we have debited we will give to the broker. So these like there are three ways: either client creates a new block, or there is a PUSPA sale, or there is a regular sale and there is payout to the client. That money we will take from the payout of the client and give it to the broker.
Sample file is required of all new files along with existing files.
Okay, so we'll look at this request. Formats we have published, sample files we have not yet given. We'll look at this. We'll take this feedback.
Demat payout of order, understand first UPI client and normal client or anything else?
It's just payout, right? So payout is at the same time. So whenever we give payout to the depositories, we are giving payout of regular customers and UPI customers at the same time. There is no difference. Like no one client is receiving before the other. We are giving payout of all clients together.
If single amount of debit, then stock payout to Kuspa, this is full stock or up to debit amount.
It will be full payout. So, if I understand this question, if suppose there is 1,000 rupees stocks worth that is payout to the client, and there is the shortage is only 100 rupees. So, the question is that are we going to keep only part payout to Kuspa and rest give the shares to the customer? So no, because we wouldn't know which shares to keep and which to give. So even if it is a small shortfall, the entire payout that is due to the entire shares payout that is due to the customer will be pledged in favor of Kuspa. But of course, it is expected from the Kuspa pledge, member will only sell to the extent of the shortfall of the client.
If up to debit amount, then can broker do the same thing in their books of non-UPI clients?
No, I think this question becomes not applicable because, like I said, it is not to the extent of debit amount. It is to the extent of the whole payout will get pledged to Kuspa.
What is the timing of UPI debit and credit?
Okay. So debit to your UPI customers, we will not do it before 8 p.m. So we will do it on T-day after 8 p.m. We are giving, so after market has closed, we want to give sufficient time for the clients to create the UPI block in case they have not created, or is there a, before trading, if they have not created, we want to give enough time for them to create blocks. So before 8 p.m. we will not debit. After 8 p.m. we'll initiate the debit, and it might take up to 9 o'clock, or that time will vary. But only thing is that 8 o'clock is the cutoff before which we will not debit. Before we are giving time till 8 o'clock for creation of mandate. After 8 o'clock we can debit. Generally we have been debiting around 9:30, that timing. But like there is, we can debit earlier also, just that we will not debit before 8 o'clock. And as far as payout is concerned, we will give the payout along with the regular payout. So the regulatory cutoff for payout is 2 p.m. By which we will give it to our bank. Uh, that is the cutoff. We'll try to do it as before that, but by regulation, the cutoff for giving payout to our sponsor bank is 2 p.m. On T+1.
Next question. Is UPI bill pay in payout settle on same dates?
So if this is I interpret this question as is the CC going to do pay in payout of UPI clients on the same day? So the answer is no. We do the debit to UPI block on T-day, and we give credit because on the counterparty we don't know. Counterparty may be a UPI client, may not be a UPI client. So debits to UPI blocks are happening after 8 p.m. on T-day, and payout to the UPI clients as well as non like the regular payout to brokers, that's happening together on T+1, and that we complete before 2 in the afternoon on T+1.
When will security payout come?
So security payout, like I said, it is the same timing. We are not doing any differentiation between a regular payout and UPI clients payout. That will come together. So whatever time it is coming today, same time will continue to come.
When will fund payout come to the client bank account?
So like I think it's the same question. So we do it on T+1 afternoon. We try to do it as early as we can. Of course, after paying. So 2 p.m. is the regulatory cutoff for giving payout instruction to our banks. So generally you can expect it before 2 p.m., a little before 2 p.m., but 2 p.m. is the cutoff.
What if I generate wrong expense file or forgot upload expense file and extra credit come from client?
Okay, so the file for trading member charges, if you are using this option, you have to give it by 6 p.m. If you don't, like we have given in the circular, if you don't upload this file, we will do the debit based on the default percentage set by you. And in that case, if there is any excess, if there is any excess money received, you will have to return to customer. So to take an example, suppose 1,000 rupees is the obligation, or sorry, 1,000 is the turnover rather, and you have set 1% as the default rate. So 1% of 1,000 will be 10 rupees. And so what we will do is we will wait for your file till 6 p.m. If we don't get the file till 6 p.m., we will consider 10 as the charges and debit it. and suppose the actual charge was only 6 rupees, then this extra 4 rupees you need to refund to the customer. And if you give a wrong file, so if what will happen is, suppose if it is more than the percentage, we will not debit. So suppose if you give a file in which you have given obligation as 15, so then we will say that no, based on the 1% default rate that we have announced to the market also. So because yeah, but the other thing that you must keep note of, and which is also mentioned in circular, is that this default rate rate is published on our website. As what is the percentage that we will debit or by default. So this default, if the amount that you have given in the file exceeds this default rate, then we will not debit. We will debit based on default rate. So if you generate a wrong file, and sticking to our example, for a 1,000 rupee trade, default brokerage comes to 10, and you have generated a file with 15 rupees. So we will say that no, we will not take 15, we will only take 10. And suppose on the contrary, you generate a file that has even less. So suppose uh, the 6 rupees was the brokerage, and it is you have only sent 4 in the file. So we will collect 4, and this 2 rupees difference which you have collected less by mistake, that you will have to settle by the client. So if you forget, we will debit by the default rate, and then if there is any excess, you will refund to customer. If you generate a wrong file, if it is excess, you will have to return. But if it is excess beyond the default rate, we will not debit. And if it is less than the default rate, you will have to get the remaining amount from the customer.
Can credit balance of client consider for margin report or CM? So I believe this question is not clear. In future, T plus 0 also work same is the same in UPI.
Yes, so I think T plus 0, we don't know how it will come. The discussion paper from SEBI is out. So if you see that discussion paper, there is an annexure A, so which gives high level picture of how UPI clients process will be in case of T plus 0. So again, that is a discussion paper, and circular is not come out yet. But like the current thinking, you can read in the annexure A of the discussion paper.
OFS buyback DS market type in UPI block, how will it work?
So right now, this UPI block is available only in cash market.
Derivative physical delivery of UPI client.
Okay, so this point is covered in our operating guidelines also, and I think this is a point that you should be very careful about. The derivatives physical settlement is treated, together with cash market after, no, it is consolidated with the cash market settlement. So if first of all, it is optional for you to whether to allow clients who are in cash FO both to participate in UPI. But suppose you do, and the customer is also trading, then no, you must note that if there is any physical delivery obligation so he's trading F&O normally, because it's only live in cash market, and cash market the customer is trading through UPI. The physical settlement of F&O will have to be done through UPI, because that's part of the consolidated cash plus FO settlement, which is considered part of cash. So even though the customer is trading through the non-UPI route for F&O, the physical delivery of this customer will be through UPI for physical delivery, physical settlement.
If broker is TM under CM, then any changes in system or all your files will come to the TM as well.
So yeah, if you can refer to the circular, the files of TM, wherever we are giving CM files, we are giving TM files also. Only one important difference is that the release request of the block has to come from CM. So trading members cannot put collateral release request. Same way, they will not be able to place request for release of the UPI block. So release of the UPI block, that request has to come from the clearing member. But otherwise, all API notifications such as block creation, even block release, or all notifications that are going from the CC, they will go to both CM and TM. And even the reports also are going mostly to both CM and TM.
Where to find exact date from which the date UPI is active of the client? So for this, just like permitted to trade, all the validations are done and we will show you the status as permitted to trade. The same way for UPI clients, post all successful validation, status will be shown to the member where the client can trade on UPI platform. So that will be visible to the members. So moving to next question, how to start back office software from CUT cut of if any vendor change. So this question the member can take up with the vendor itself. The next question, how to get time-wise transaction of UPI block from CC.
So when we are sending any notifications, we are giving timestamp also. So even if it is block creation or block debit, everything is going on API with timestamp. So you can refer to this timestamp from the API calls, API messages.
So by this, we come to an end of this open house. In case you have further questions, you may reach out to the exchange and we'll be happily able to answer your questions. Thank you.
Thank you.